Assalamualaikum and good morning to Dr. Anita and my fellow friends. We are from Group 2, ECN3112. Today we will be presenting about non-profit loss sharing, which is also known as non-PLS. So before we start, let us introduce ourselves first. My name is Nur Afina and my metric number is 201867.
My name is Nurhazira binti Usaini. My matrix number is 201871.
My name is Nurshani Pazafira binti Ahmad Sharoni and my matrix number is 203535.
My name is Nur Izan Ajwa binti Osman. My matrix number is 203541.
My name is Nur Balkis binti Muhammad Rizwan and my matric number is 203542.
So, under non-PLS, there are 4 types, which is Murabaha, Ijarah, Salam, and Istisna. So, I will explain on Murabaha. Do you know what is Murabaha? Murabaha is a contract where sale of goods at cost plus agreed profit markup. Basically, this contract is a kind of trade financing instruments used by Islamic banks. Murabaha comes from the Arabic word, which is rabaha, basically means profit, and Murabaha is defined as a particular kind of sale that compliant with Sharia, where the seller mentions the cost he has incurred on the commodity sold and sells it to another person by adding some profit or markup which is known to the buyer. Typically, Islamic banks use Murabaha in asset financing, property, commodity import-export, and microfinance. Furthermore, Murabaha is not a loan based on interest and it is a sale of commodity for immediate and deferred payment. So next, in Murabaha, there are conditions that need to be observed for it to be Sharia compliant, which are costs of capital should be disclosed, the activities should be usury free, the activity should be transparent to both parties, and advance payment or deposit is allowed. So there are 4 types, there are 4 types of Murabaha, which are ordinary Murabaha, Murabaha to the purchase orderer by Bitaman Ajil, and Tawaruk. So I will pass to Hazira for the explanation of each type.
Okay, so I will explain about ordinary Murabaha first. Ordinary Murabaha is defined as the sale of good at cost plus agreed markup. In ordinary Murabaha, there are only 2 parties involved, which is the seller and the buyer. The seller is the trader who buy commodities for his own inventory without depending on a prior promise of purchase to the customer. As we can see, there is a picture show the stage involved in Murabaha. For first one, which is the Islamic bank to the asset supplier or vendor. The Islamic bank buy the good for Murabaha sale from the vendor and pay for the goods. The second one, the vendor will subsequently deliver the goods to the Islamic bank. The third one, the Islamic bank enter into a Murabaha contract with the customer and deliver the goods. And the last one, the customer then pay for the goods at a price that is equivalent to the cost and the predetermined markup to the Islamic bank. Next. So the second type is Murabaha to purchase order. This is type of Murabaha is widely used by Islamic bank. The purchase order can approach a bank expressing his wish to buy a specific good. This wish may not be seen as a promise or a commitment by the customer to purchase the goods unless the promise has been documented in an official requisition form. The nature of this transaction involves 3 parties, namely the purchase order, which is customer, the purchaser, which is bank, and the seller. It is a Murabaha transaction wherein the Islamic bank purchase an asset upon the request of the customer from a third-party seller in order to resell it on the deferred payment basis. Next. So there is a stage involved in Murabaha to the purchase order. Okay. So the first one, the customer requests the Islamic bank to purchase the specific goods which is promised to buy from the Islamic bank, giving it some profit. Second, the Islamic bank buy and pay for the goods from the vendor. Third, the vendor deliver the goods to the Islamic bank. And fourth, the Islamic bank execute a Murabaha contract of sale with the customer and deliver the goods. And lastly, the customer paid for the good on an installment basis to the Islamic bank. Okay, next. Okay, the third type of murabaha, which is Bai Bitaman Ajib, or we can call BBA. BBA is means sell with the deferred payment of the price. Bai Bitaman Ajil is one of the most popular Islamic financing technique used in Malaysia, and it can be considered as a substitute of the finance lease. It is used by customers to purchase assets of substantial value in installment, from which they can generate future cash flow. In this agreement, the customer get the asset and is required to make payment as per the agreed tenure in installment. The customer purchasing the asset is required to pay the profit to the financial institution that arrange the asset. Okay, I will pass to the next presenter.
So the last types of murabaha is tawaruk. Tawaruk is one of the instruments that Islamic banks use to provide liquidity, or we call it cash, to clients to meet temporary shortage of funds. In tawaruk, it consists of sales contracts, which is the first one involve the sale of an asset to a purchaser on a deferred basis, and the subsequent sale involves sale of the asset to a third party on a cash basis. And the common features of each sale and purchase contract in the tawaruk is the transfer of ownership of the asset from the seller to the purchaser for a consideration. Also, the contracting parties in the tawaruk may be a natural person or a legal entity. So this is example stage involved in tawaruk. First, the Islamic banks will purchase the asset with selling price, for example, 100,000 ringgit from asset supplier 1, and then the Islamic bank pays cash to asset supplier 1. Subsequently, the Islamic bank sells the asset to the customer at an agreed selling price of 120, which include 20,000 ringgit of profit. The customer makes deferred payment through money installment for a period. Example is 5 years, and then subsequently the customer appoints the Islamic bank as its agent to sell the asset to asset supplier 2 on spot at selling price of 100,000 ringgit. Then the last one, the customer obtains a cash 100,000 ringgit required for the financing. So I will pass to the next presenter.
Thank you. Now I'm going to present about the second type of non-PLS, which is salam, or called buy al-salam, which is a forward sale. Okay, next. Salam in this can be defined as giving, advance, and leaving, and it will refer to a sale contract where the seller undertakes to sell specified commodities or goods to the buyer at an agreed future date, and in exchange, the buyer need to pay full price in advance or spot basis. Next. Let's look at the rules and conditions of salam contract. There are 3 requirements of salam contracts. The first one is transacting parties, that consists 2 parties, which is the seller and the buyer. The second one is subject matter, and the last one is sighah, which means must have ijab and qabul. There are rules and conditions in salam contracts. The first one is the price must be clearly determined and paid in full by the buyer, and then the seller must take possession of the price in full before departing to one another. The second one is the object quality and quantity can be specified, which can be movable, transportable, and freely available. And the last one is the exact date and place of the delivery must be specified in the contracts. Okay, next. There are 2 types of salams, which is simple salam and parallel salam. Let's look at the simple salam. In simple salam or ordinary salam, you can see at the first stage, the client approaches the Islamic bank to sell a specified commodity. And at the second stage, in return, the bank, which is the buyer, will pay the full price to the customer for a specified commodity. Then the client will deliver the commodity to the bank. For the second salam, which is parallel salam, bank can be a buyer and a seller. The first stage, the bank will be as the buyer, will enter into a salam contract with the farmer and pay full cash in advance for the commodity that the farmer sells. And for the second stage, the bank will be a seller that enter into parallel salam contract with the wholesaler, which is the buyer, to sell the commodity specified. on the third stage, which is on a future date, the farmer will deliver the commodity to the bank. And then, let's say, on the same future date, which is on the fourth stage, the bank will deliver the commodity to the wholesaler as they buy the commodity from the bank. This future date will be according to the parallel salam. The purpose of salam contract is to meet the needs of small farmers who need money to grow their crops and to feed their family up to the time of harvest. And the another purpose of salam contract also to create moral obligations on the salam seller to deliver the goods on the exact date as promised in agreement. The last one is benefits of salam contracts. For example, after purchasing a commodity through salam contracts, the financial institutions, which is bank, still can sell the commodity using the parallel salam for the same date of delivery. And then the period of parallel salam is shorter and the price is higher than the first contract. That's all from me. Thank you.
Okay, next. Okay, next I will tell you about what is ijarah. Next slide. Okay. So the first thing is the definition of ijarah. Ijarah derives from the root word ajara, which means to compensate or giving consideration and return. Ijarah is meant by a lease contract to sell the right to use an asset, or we call it as usufruct for a specified period of time. And primarily, ijarah refers to rental and hire contract that engages the services of persons. But currently, ijarah is referred to two types, which are operational lease and financial lease. Next. Okay, next is about the rukun of ijarah. Ijarah have 4 rukun, which is the first one is the presence of two parties, which are the lessor and the lessee. The second one is offer and acceptance. The third one is reimbursement or compensation. And the fourth one is specified usage. Next. Okay, so I will tell a little bit about ijarah wa iktina versus ijarah tumah al-bait. Ijarah wa iktina is meant by customers have an option at the end of the lease contract to purchase the asset at predetermined residual. And ijarah tumah al-bait is meant by two contract, which is the first contract is called al-ijarah, which means it is when hirer lease an asset at an agreed rental over a specified period. And the second contract is called al-bait, which means upon expiry of the first contract, hirer purchased the asset at an agreed price. Okay, next. Okay, so in ijarah, there are two types of ijarah, which is the first one, to employ the services of a person, which mean an employer, which is called mustajir, hired services from employee, which is called as ajir. Employer paid wages to employee for the service rendered, and the wages paid is called as ujrah. And the second type of ijarah is to the usufructs of assets and properties. So it is meant by when the lessor transfers the usufruct of an asset or property to another person in exchange for a rental paid by the lessee. So in this type of ijarah, lessor is called as mu'jir, lessee is called as mustajir, and the rental payment is called as ujrah. Okay, next. Okay, so in ijarah, there are a few basic rules of leasing. The first one is owner of an asset transfer the usufruct to another person for an agreed period at an agreed consideration. The second one is the leased asset must have a valuable use. And if the leased asset does not have usufruct, then the asset cannot be leased. And the third one is all liabilities emerging from the ownership will be borne by the lessor, but liabilities referable to the usufruct will be borne by the lessee. And the fourth one, lessee is liable to compensate the lessor for every harm to the leased asset, which is caused by any misuse or negligence of the lessee. The fifth one, the period of lease must be determined in clear terms. The sixth one is lessee cannot use the asset for any purpose other than the purpose specified in the lease agreement. Next. The seventh one is any harm or loss caused by factors beyond control of the lessee must be borne by the lessor. The eighth, the rental of assets jointly owned by two or more persons will be distributed according to their shares proportion in the leased asset. And the ninth one is it is necessary for a valid lease that the leased asset is fully identified by the parties, which means the asset must be fully identified and fully determined by the lessor to the lessee. And the last one is rental is determined at the time of contract for the whole period of lease. And the rental can be fixed or varied amounts, but to be in varied amount, the both parties, parties must agree upon the amounts. And next. Okay, next I will tell about the termination of lease. There are three methods that the both parties can do to terminate the lease contract, which is the first one is contravene of agreement. It is mean by if the lessee contravenes any terms in the agreement, the lessor can terminate the contract unilaterally. So it means that the lessor can terminate the contract without telling the lessee that he want to terminate the contract. And the second one is mutual consent, which means that the lease agreement can be terminated if there is mutual consent to terminate the contract, which means that both parties agreed to terminate the contract. And the last one is misuse and negligence, which means lessor can terminate the agreement if lessee has caused loss to lessor due to misuse or negligence, and the lessee need to compensate the lessor for the loss he made. And I will pass to the next presenter. Thank you.
Thank you, Balkis. Okay, now I will presenting about the istisna contract. First thing first, I'm going to explain what is istisna. Basically, istisna is a forward sale for the manufacturer of goods such as building, set of table, car, or construction contract like road construction. The unique feature of istisna is that nothing is exchanged at the time of contracting. So generally, the istisna contract could be directly between the end user and the manufacturer, but it is usually a three-party contract, which is the bank will act as an intermediary. Under the first istisna contract, the bank agrees to receive payment from the client on a longer-term basis. Whereas under the second istisna contract, the bank as a buyer will make progress installment payments to the producer over a shorter period of time. Next, I will explain about the parallel of istisna. As a manufacturing contract, istisna is very suitable for project financing, and the seller could either manufacture the goods on his own or he could hire another subcontractor to do the job. The next one is payment in this contract is very flexible, which is it can be done upfront or at the end or by installment. Bank would also release progressive payment, which is payment according to stage of completion of the construction. Furthermore, being the seller in the first istisna contract, the bank is liable to any non-completion or non-conformance to specification risk. Therefore, it is very important to have a project management team to ensure the selection of project to be financed using istisna is carefully made. Okay, now let's proceed to the purpose of istisna. Firstly, the istisna contract is intended to fulfill the community and individual needs through manufacturing. Secondly, the istisna contract is also meant to protect the well-being and the development of the economy. Lastly, I will continue to the benefits of istisna. The first one is Istisna offers flexible financing terms to match the customer's requirement, and it is also encourage and facilitate the full use of the talent and technical capability. Last but not least, Istisna will provide protection against the inability of the manufacturer. That's all from us. Thank you.